What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is December 2nd of 2022. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to talk about what could be one of the last major disastrous events for cryptocurrency markets that could play out over the next coming months. And it has to do with the continued traded discount for the Grayscale Bitcoin Trust, or GBTC product, where right now the current valuation of GBTC shares are trading at minus 42% against their actual claimed net assets under value. So we're going to talk about two probable scenarios as to what could be going on here, because as we all know, the market price doesn't lie. The trend does not lie here. So what's really going on here, we'll talk about as we go throughout the video. And on top of that as well, a few key things to understand. We've got a sponsored interview later on with Blockwallet. So if you guys want to know where the core content ends and stops, you can check out the timestamps. But I definitely recommend you stay tuned for that, because it has to do with self-custody. And outside of that as well, if you enjoyed the video, consider dropping a like. Let's go ahead and kick things off. So as we can see, over the last year, we have been on a clear downtrend from a more kind of fair value range here for GBTC, at least on the claimed net assets under value. And if we step back over 3 years ago, we can see that things have changed quite drastically. The GBTC product used to be trading at a premium back when there was a shortage of shares to meet the exuberant amount of demand on brokerage accounts and hedge funds, as well as in accounts such as our IRAs and 401ks, right? These are kind of retirement accounts for people wanting to get exposure to Bitcoin, and there just wasn't really the vehicle to do so. They didn't want to go on Coinbase or the traditional exchanges, and that's where GBTC stepped in. Now we can notice here, if we take a look at the logarithmic Bitcoin chart, I'll just go ahead and hop over to the weekly here. We can see that there's a very different structure in Bitcoin's price from the GBTC product, and we can see that premium switching to a discount. So if we take a look at the GBTC product, we're now trading at around where we were back during April of 2020. This showcases again that back then there was a premium being paid, and now there's a clear discount in regards to the price of GBTC shares. So what's really going on here? Let's go ahead and talk about two of the key scenarios here, because right now that discount is just growing. I mean, just here over the course of 2021 and 2022, it has dropped a whopping 62% from that premium range to a discount. So first off, we need to understand that there is a concern around the proof of reserves. This is the more conspiratory side of the explanation. And I have to say that while I say it's conspiratory, I don't mean to insult it by any regards. I think the concerns people have are quite genuine here, because while I like a lot of the players here who are involved in the GBTC product, I trust Coinbase a lot more than I trust the vast majority of exchanges out there. They're the one supposedly custodying it through Coinbase custody for Grayscale holding those Bitcoin reserves. And also, I've been a big follower of Digital Currency Group and Barry Silbert, and more specifically Grayscale, in pushing forward and fighting against the SEC to get these products out there. I've been a big fan of the idea of getting a Bitcoin ETF out there for a long time. But keeping that in mind, this is probably one of the biggest red flags I've seen within the crypto space in a long time, considering the scale of Grayscale as a company. And that is the fact that Grayscale refuses to share a proof of reserves due to security concerns, as shares trade at a 45% discount to Bitcoin. Now, I understand there is sometimes a justification or explanation as to why things can't be done the way people want them to be done. Sometimes there is rational reasons to it. But I have to tell you all something, and this is like basic cryptography and crypto 101. I can expose my public address to all of you. Today, I could tell you what my public address is for Bitcoin. Even if I had 1 million Bitcoin, I could show you on a public address, which unfortunately I do not have. Wish I had it, but generally speaking, if you had a public address that has on-chain verifiably 1 million Bitcoin, which you could demonstrate and showcase, right? I could even, for example, sign with my private key and move that Bitcoin to another wallet to show that I actually own those Bitcoin. Right? There are lots of ways where I can confirm this, but all the while, I'm not exposing in any way, shape, or form an ability for you or anyone else listening or watching to be able to spend my Bitcoin, to access my Bitcoin, because of the security of that private key. And this is the big red flag here, because there is no real security concern with basically proving that you own Bitcoin. If you have a solid custodial solution, if you make sure to keep those private keys, especially probably spread it over multiple wallets, in a secure way, then there's no risk there. There's no risk to proof of reserves. So this to me screams that there's something they're hiding, because if they can't show the addresses and simply just sign with their private key that they own them at a specific date and time, then that is going to be a clear sign that they are essentially out a certain amount of money. They do not have the Bitcoin to satisfy the creditors of their ETN shares as they originally promised. Now, to be honest, there are a lot of ETF products that are paper products like GLD and SLV that don't have the proper amount of gold or silver to back up those shares, a fraction of it. And maybe that's where Grayscale went with this. But I got to be honest with you all, this is going to probably upset a lot of investors because the original promise was to have a one-to-one peg to net assets under value. Now, if we take a look at a lot of the range of investors here who are already in these ETFs, you have ARK Investment Management, who again, I got to tell you guys, we wrote about this in the newsletter. I don't have nothing against Kathy Wood or the team there at ARK, but I got to be honest with you all, they bought the top and they're in all of the risk assets. Their average share price is around $41. And if you go down the list here, there are a lot of other players who really bought the top here on the Grayscale product, bought into that demand period, and are now massively in the red, many of which are likely in a position where if they haven't already, they are likely going to have to capitulate. Now, we've talked about the one key concern here, right? And again, I think it plays into it, the fact that they can't show the reserves, and we also haven't seen Barry Silbert tweeting. Barry Silbert used to be a big loudmouth on Twitter. I had alarms, as you can see here, I have alerts set for him. I always want to listen to Barry because Barry is a big institutional guy. He's been around the space for a long time. But you can see how 6 months to a year ago, he was real up and out about crypto and taking risks and talking about things. And now he's gone dead silent. And there are either two moments where a CEO goes dead silent on Twitter. Either when they are planning out a big new release, something exciting, usually during bull markets, or they're in damage control and something is really wrong. And we already know the Digital Currency Group and Grayscale, Genesis Trading, one of their subsidiaries, right? So Digital Currency Group, just to understand the structures, the parent company of Grayscale, Genesis Trading, CoinDesk, a whole range of different companies, Luna Global, etc. We already know here that Genesis Trading was short $1 billion, and no one is willing to give them that $1 billion, at least as of now, at least as of the public knowledge that we have. So is there some kind of cross issue here between Grayscale and Genesis? Did something happen? Well, I want to go ahead and push us towards the second topic here, because that right now is a conspiracy. We don't have a smoking gun here. I have to say there's very rightful reason for concern, but it's not enough to make any confirmed statements. So what's the second plausible scenario? Second plausible scenario is a simple reality check of how the GBTC product works and what originally gave it a premium that is now likely giving it a discount. If we look back through history, the GBTC product did not have enough shares issued. The way that it works, just to understand it here, is from my understanding of the concept is that because it's the one-to-one backing, essentially, it's the idea of the GBTC product. It's almost as if you're owning on-chain Bitcoin, except it's being custodied for you, right? So essentially, they would purchase up Bitcoin on the market, whether it be OTC, spot market, you name it. They have their methods of getting it and essentially putting it into their custody solution, issuing shares, selling it onto the open market. And the way that Grayscale monetizes is through a 2% management fee. So each year, the value of those shares and stuff, they extract essentially a 2% management fee for holding those shares, right? So that's how they monetize it. They provide the convenience and the custody for you. You don't have to worry about it. It's all packaged for you, but they charge 2%. Now, we've already talked for a long period of time about how Grayscale has been slowly but steadily distributing or selling some of those GBTC shares, right? Essentially unloading some of them and putting Bitcoin back in the market, back about a couple hundred Bitcoin each week, right? And the big thing I want to focus on is that this likely may mean that there's just way too much saturation of GBTC shares. That is why we're continuing to see a further collapse here and why we've been on a steady decline for a while. It's not rocket science, because if there isn't the demand in brokerage accounts for one, just to buy Bitcoin, and there's a ton of shares issued, people will start unloading it. People start realizing that there's no buyers coming. And on top of that, to make matters worse, in this case, there's a 2% management fee. So maybe they're like, oh, you know what? Like, man, this thing's trading at a 10% discount. I'm going to sell and take what I got, and I'm just going to go ahead and buy Bitcoin. Now that I'm more familiar with it, maybe now there's better solutions out there outside of these typical ETF or ETN products. There's other options out there as well that maybe don't have the 2% management fee. But what does all this mean, right? Because that would just be bad for GBTC shareholders. But what I think is going to happen here is I think if this is the scenario, Grayscale as a company is going to have to start unloading lots of Bitcoin. They are going to have to save their core product. And the only way they're going to do that is by removing the massive dilution of shares that are out there, the mass availability of shares. So they're going to have to take that Bitcoin, sell it on OTC, sell it on the spot market, start having a negative effect on the core price in order to save their existing product. And if that happens, and you mix that in with the continued contagion from FTX and Celsius and BlockFi and all these players out there, you mix in the concerns around Mt. Gox, or Magic the Gathering Online Exchange, finally releasing their over 140,000 Bitcoin on the open market that couldn't have been sold for the last practically 7 years. You got a big storm coming. And that's how you get Bitcoin down to low 5 digits, 4 digits, really crazy capitulation levels. You get people in a position where they're not now, but again, this is where capitulation really happens, when people are fearful that the industry is going to end. Now, we know crypto will hold that. It will come back. But there was a lot of people who did a lot of wrong things and took a lot of risks and are still not willing to maintain the professional standards. And I have to kind of understand now, really, I have to say in hindsight, man, SEC might have been on to something here, right? The industry, even when it has this opportunity to experiment with an ETN product, if we figure out there are not the claimed reserves that they have, that is incredibly bad news for how crypto looks in the light of institutions that many people are saying a year or two ago, oh, they're going to buy into Bitcoin. If we can't even give a proper product to more risk-on funds like ARK to invest in Bitcoin, how are we going to win over the institutions? How is Bitcoin going to become a world-renowned product? At least not for a couple years, if that's the case. So anyways, guys, again, just some thoughts to share out there, but we can't ignore the discount. It's real. And again, if you guys are interested in this kind of research and analysis, and you want to see as well our Bitcoin roadmap, if you more specifically just want to get down to the price action of things and where we think we're going, I definitely want to recommend you guys check out the Dash Report. This is our newsletter here on the channel. You can save 20% with a yearly membership here. We've kept our prices the same here, even during all the wave of inflation. The key thing here is that you guys get access to a monthly newsletter where I talk about crypto, stocks, Forex, you name it. And on top of that as well, you guys will get access to my trade alerts. You'll be able to access our mid-month webinars, the Dash Report discussion group, some exclusive market update videos, all kinds of stuff. So if you guys want to check it out, check that down at the link down below. But let's go ahead and dive into this really exciting interview with Jan from Blockwallet to talk about self-custody within the crypto space. Alrighty, everyone. So in today's sponsored interview, we're sitting down with Jan Zabelnik, who is the product manager over at Blockwallet. This is one of our long-term partners here on the channel, and one of the most interesting self-custodial wallet plays when it comes to browser extensions that I've seen. Jan is the perfect person to talk to as well. He's the product manager of the project. He's worked with the team for some time. So Jan, thank you for coming on, man. I don't think there could be a better time for us to chat with all that's going on with centralized exchanges and the need for self-custody. So thank you for making the time. I appreciate it.
Yeah, happy to be here. Thank you.
Awesome, man. So let's go ahead and talk a little bit about this, because I know what you guys have built is a very big focus and emphasis on privacy, on user security of funds, cleaning up the user experience. I think if we take it back like a year or two ago, the arguments that I always heard from people are to focus on centralized exchanges for convenience, and that the traditional wallets that were out there were just too difficult to use. And I think, to be honest, if you're talking about players like MetaMask, which are probably the biggest wallet extensions, they got a lot of great points, to be honest. And sometimes it made it where it was more favorable to use an exchange. But now we've realized it's not so much a focus on just the convenience aspect, but first off, security. And with the FTX crash, I think that really just showed us here that there is a lot of risk of contagion and a lot of issues that still persist. So Or now do we look at it and stuff like, are there even more risks associated with like a centralized exchange? Like, do you feel like right now is really that time to go into it's using a self-custodial wallet?
Oh yeah, definitely. I think the time is really great to start thinking about it and start learning. Because what I think is that the like your finance journey is like starts really when you get your first bank account. And then you sort of move forward, right? And like when crypto came around, sort of your first step into crypto was using a centralized exchange, right? And what the notion was already back then was to start off small, right? Start with smaller amounts, start with something that you're comfortable with, and start learning, right? And I think this still holds for decentralized finance. So when you're making the switch, it's just a matter of knowing the rules, knowing some of the basic concepts, and then just when you feel comfortable to make the switch, you can do it very easily. You can use Blockwallet because we're really like trying to make this experience as smooth as possible. And again, like we did with sexes, right? Just start off small, start with small amounts, play around, and start the journey by learning.
Absolutely. Yeah, I mean, on that point, Jan, like I think what you guys have done so well is you've taken the traditional browser wallet extension experience, which is probably the most predominant self-custodial form of wallet if you're interacting with major DeFi apps on any of the major layer ones or layer twos. And you've been able to really clean up that experience. I know I, for example, have really enjoyed the ability to connect to networks streamlined from within the wallet. So you make sure you're not connecting to a fraudulent network or inputting the wrong information. It saves a ton of time on onboarding. And on top of that as well, you guys have the bridging feature. This is one of the big new releases that you guys just put out. I'll show it up here on the screen just so people can see it. And I think if anyone here is watching this video who over the last year, say during the last bull run, had to do what you guys offer within one click manually through MetaMask, they know it would just take dozens upon dozens of minutes, if not hours, to get everything set up. And you always have a security risk, which I know we can talk a little bit about later on, but the user experience is just incredibly clean, man. I mean, how did you guys go about like doing this and building it?
Thank you for the kind words. So yeah, the main idea behind all of this was that just getting into it is a big challenge for many people, because many people realize that like they're taking on a different kind of risk when they switch to a self-custodial wallet. And there's so much going on in the space that it's really hard to keep track. So our idea here with all of these basic features that we're delivering was to make this transition as easy as possible, in the sense that you have all the basic tools available to you within our product. So you don't necessarily need to explore in order to start utilizing all the tools that are available to you. So basically, what our idea was to with swaps and bridges and the custom RPCs. So for the beginner users, custom networks, was to make it really simple to get to grasps with the basic notions and the basic concepts, and start using as many chains and as many like protocols as possible. So what we're doing here is basically giving you the basic tools so that you can start like moving about in the space. And when you learn, you can start moving into dApps that offer you even more features.
Yeah. I was going to say on that point, Jan, like what I love about it is that, I mean, and this is with all self-custodial wallets, you got to have a private key, which is in the form of a seed phrase, a recovery phrase. And what's nice is that you guys, if I remember correctly in the onboarding, you give the option to choose which type you want, like from, I think, 12 to 24, to be able to scale it up for higher security. And on top of that, once you've gone through that one step, right, writing down your recovery phrase somewhere safe, only where you would know as an individual, what I think is so great is that your guys' wallet really, I think it's not just for beginners, but I think it also works as for professionals as well. Because if you think about it, all the major things that most people want to do on DeFi, interact with other layer ones or layer twos, people who want to bridge assets from one chain to another, or do native swaps within the app. You can do all that from within Blockwallet. And I think that's so nice to be able to not have to leave that user experience from the extension. And I think, as you mentioned, one of the problems comes from the security angle, right? if you are you'd like, for example, every time you want to do a swap, if you're searching up Uniswap or if you're looking up a bridging website, all of those are potential attack vectors where if you type in the wrong domain or if you Google search it or search it on maybe DuckDuckGo or something where the search engine doesn't filter scams, in that case, you can be exposing your private keys to a malicious actor. So this is, again, I think why you guys have really felt from like a product side about really kind of incubating and keeping the user safe, but giving them all the same features plus additional levels of privacy.
Yeah, I agree. So the idea, yeah, is for the beginners to be able to perform these basic actions very securely.
Yeah.
And for the advanced user, you still have the option, obviously, to connect to all the dApps that are out there. And we're sort of counting on the users here to be knowledgeable enough to figure out what is safe and what is not, because we really can't. So we can't take care of all the threats that are out there. But what we can do is provide like these basic tools that beginners can use within the wallet, and they can rely on them being safe. So for example, if you want to swap some tokens on a chain that you're already familiar with, you can do that. If you want to bridge some tokens to a chain that you want to use to perform certain actions, you can do that easily within the wallet. And what we also offer with the custom networks is basically a vetted list of networks, so you're not really exposed to malicious networks
Exactly.
unless you play around with the settings, right? But this is generally hidden for advanced users, so there's very little like opportunity for beginners to go wrong on that.
Yeah. And those customized settings, as you mentioned, might be used by like a developer who's going on a test net or something, or needs to plug in a custom network that may not be mainstream. But that's the cool thing is,
Exactly,
I mean,
yeah.
you guys have Arbitrum, Optimism, Binance Smart Chain,
Yeah.
Phantom, all the big ones that I can really think about, Avalanche as well. And I think that that's so nice to, again, have that streamlined experience where you're getting the best rate for bridging, you're moving over assets to different chains, you can interact with swaps. One thing, though, I always have as a question, because as you mentioned, the one thing, when you go from an exchange and you're going to a self-custodial wallet, you've got that private key. And that is essentially, I think, the simplest way. I don't know why we don't explain it like this in crypto. It's the password to your funds, right? It's a one-time password. And if you lose that password, then you can't recover your funds. Or if someone gets access to it, it can be given a malicious attack vector to steal those funds. So I wanted to ask you, like, the big question I always get from people is, how do you know that a private key is secure and like hasn't been exposed when going through like the onboarding process, for example?
Yeah, so with Blockwallet, so what we do is take the approach that most other wallet, like this is an approach that is shared among wallets in the space. But what we also do is we audit our code, and our audits are transparent. We post them on our website, so you can always check the audits, and you can also check the code of the wallet on GitHub. So the key that you receive when you onboard to Blockwallet is never exposed to anyone by itself, right?
Right.
So this is the responsibility of the user, and there are tons of best practices for storing this seed phrase, these 24 words. And the best thing to do is to write it down and keep it offline, right? Like we've seen so many horror stories when users store them online, emails. Like this is something that people have to learn. This is like just going back to where I was talking about the centralized exchange experience. So starting off small, learning the concept. This is the key concept that every new user on DeFi has to learn.
Man.
Like you said, the seed phrase is the key to your house or to all of your money, and it can be used anywhere. So that's why you have to keep it extra secure. Write it down, never show it to anyone, don't store it online, don't paste it in your apps. This is the key concept that newcomers to DeFi have to learn.
Yeah, I was gonna say on that point, Jan, like on the developer side, like that's awesome that you guys put your code out there. And as you mentioned, it's industry standard to basically program wallet generation. There's pretty much an infinite amount of combinations of public and private keys or addresses and passwords to the funds. And what's so nice is that you guys, just like any other standard wallet, like you said, do it in a locally generated way. So the code basically will generate that public-private key paired to those funds on a local basis. And then from there, it's a matter of making sure you write it down. You've got it in a safe place. There's a lot of interesting solutions on how to like store it and write it and put it somewhere safely. But putting it on a piece of paper in a lockbox or somewhere where you know that no one else will get access to it, or in a safe place, won't be misplaced. That's priority number one for sure. And once you do that, then you've got everything kind of built in. You've got all the conveniences of swaps that you would normally have on an exchange. I'm curious as well, Jan, are you guys thinking long term? I'm sorry if I might have missed this, but like within Blockwallet, about having like fiat on ramps as well, like within the wallet itself?
Yes, definitely. But there are certain aspects of on-ramps which we're not that comfortable with, and mainly that's privacy, right?
That's a good point.
We are aware that privacy is a major concern for our users. So what we would like to achieve, best case scenario, is to be able to like on-ramp fiat via non-KYC solutions. So we're researching that very hard right now. But on the other hand, like coming from regulation, is that this is hardly a possibility. Right. So our goal is to enable on-ramp as soon as possible, but it'll have to be within our core privacy and security narrative.
And the one thing to consider as well, like as a positive note, is that if people want to take that risk of doing like a KYC portal, fiat on ramp, like Ramp, or using, I'm blanking on a couple of them right now. Like, for example, there's, wow, sorry. There's Sendwire. There's Sendwire. There's all kinds of different ones out there you can use. And what's nice is that you just plug in your wallet address and you can use a debit card or bank account. And basically, So I think in that case, there's a lot of ways where you can really go about doing it at the end of the day. Or you could still have a traditional exchange account you use to buy it, use it as the service alone, and sending it straight to your wallet. And that's where, again, you can have everything self-custodial. You've got that private key. No one else has exposure to it. And that all your transactions are being done in as private of a way as possible.
Yeah. So basically, what you just said is, this is true. Like there are services that allow you to do this. So there is no reason, if you already feel comfortable in DeFi, not to use a service that you can vet for yourself and trust, right? And this is the magical thing about DeFi. You can do whatever you want. Like nobody can stop you from doing whatever you want with your money. Whereas with certain centralized services, this is like sometimes some things are prohibited.
Yeah, I have to say, and I had my like aha moment. Like again, I think we were talking a little bit before the recording, like about when I first found out about DeFi, and when you could just swap on Uniswap, or you can just deposit on Aave or Compound and earn interest. I mean, it's a really liberating feeling. Like you didn't have to go through any layers of permission. And I think, again, what you guys have been able to do is really compartmentalize DeFi into something that's usable for people. That was always the biggest friction point. And I think you guys have not only one-upped the design and the user experience, but the security and privacy as well. There's a lot of things that prevent phishing as well that are built in to the application. Simply alone, skipping having to find a website to bridge, that's a huge attack vector point. I've had one or two people, unfortunately, use fraudulent bridges. Awesome. But again, guys, like I said, I'll leave the link down below in the description. You can check it out. But Jan, I mean, seriously, man, every word I said, man, I love what you guys are doing. I love what you're building during the bear market. It's always good to see that. And thank you, man, for just taking the time as well. Congrats to you and the team on the success and growth you're having. And we have to have you back on the channel again sometime soon, man. I appreciate it.
Thank you. I'll pass it on and hope to be here again. Thank you.
Thank you, man. Appreciate it.